Hello traders, and welcome to this week's technical outlook video here at xm.com. It's Monday, October 23rd. I'm Cristina Bartanido, investment analyst, and on this video I'll share my view on three key major pairs: euro dollar, dollar loonie, and dollar yen. We have two central bank meetings in Canada and the Eurozone on Wednesday and Thursday respectively, while a couple of key US data releases might also cause volatility in the US dollar. So starting first with the ECB and euro dollar, the central bank is expected to hold interest rates steady for the first time in more than a year. That will not be a big surprise because policymakers have already signaled opposing monetary tightening. Though what is still unknown is whether there will be more rate increases in the year ahead. Futures markets provide no clear direction about that. So if, for example, the ECB follows the Fed steps signaling higher for longer interest rates, that could still help euro dollar to climb higher. Technically, we're still within this neutral symmetrical triangle after moving slightly above this bearish channel. This doji candlestick registered near a 10-month low earlier this month is still keeping hopes for a bullish continuation alive. But there are a couple of key obstacles which we still need to overcome before we become confident that this upturn is something more than temporary. The 23.6% Fibonacci retracement of this downtrend over here is at 1.0640. So after the upper band of this triangle, we need to surpass that. And then there might be another barrier at 1.0685. That was a former constraining zone ahead of the 200-day moving average and the 38.2% Fibonacci of 1.0763. So the pair will need to rally above that wall to violate this downtrend over here. Now, looking to the downside, the 1.0550 could act as support if the price weakens immediately. This is where the upper band of this bearish channel and the lower band of the triangle are both intersecting each other. So failure to rebound here could cause another decline, probably driving the price down to the 10-month low of 1.0447. Then another violation of this point and a resumption of this downtrend could probably print another lower low at 1.0330. Well, if you look at the technical indicators, the RSI is still around its 50 neutral mark. So despite the improvement in the stochastic and the MACD, some caution remains in this market. Now turning to dollar loonie and the Bank of Canada. The central bank is expected to hold interest rates steady for the second consecutive month. But again, what will be interesting to learn is whether the central bank is still thinking to raise interest rates in the coming months. The geopolitical risks could justify this case, despite the weakness in the economy, which is still struggling to gain momentum, and the fact that inflation is has slowed down recently. So if the central bank appears more hawkish than expected, that could add some pressure on dollar loonie. Otherwise, technically, we see that the US dollar is still holding a bullish bias over here. It closed above these descending trend line coming from the 2020 top above the 1.37 level, so that still maintaining hopes for a bullish continuation. The RSI is also clearly above its 50 neutral mark, and the MACD is also slightly above its red signal line. So the bias is still skewed to the upside, but the stochastic oscillator is already near its 80 overbought level. So that suggests that a downside correction wouldn't be very surprising, but that the pair could eliminate negative risks if it manages to close again above the 1.37 level. If that happens, we may see a rally up to the 1.38 and 1.3860 key barrier where the price peaked earlier this month. Then above that, the focus will turn to the 1.3976 level, which was a 29-month high back in October 2022. Now, in the event the price corrects lower, falling back below 1.37, while the 20 and 50-day moving averages could protect the market at 1.3638 and 1.3584. We also have the support trend line at 1.3545, which could also help the pair to pivot higher. Otherwise, the downfall could continue towards the 200-day moving average at 1.3470, while this almost flat ascending line from 2022 could be another, could also attract attention lower at 1.34. And finally, turning to dollar yen, we have a couple of key US data releases. The GDP growth report for the third quarter will come out this week, but perhaps flash S&P Global Business PMI figures could provide a more updated picture about what's happening in the US economy on Tuesday. Nevertheless, while investors will look all US data releases, including new home sales, to figure out, to see how economic conditions are developing in the US economy. So if the data signal a resilient economy, they come better than expected, we may see a resumption of this uptrend above this ascending triangle, which is usually a signal of a bullish continuation. The price is currently trading at the upper band of this triangle, slightly below the 150 level. So a break above it could probably drive the market towards the 2022 high of 151.93. Perhaps it could also retest the 142 psychological mark before it heads towards this steeper constraining line of 153.40. Well, from a technical perspective, we can see strong bullish signals. The RSI is flattening, the MACD is holding below its red signal line, and the stochastic oscillator is already above 80. So there is potential for downside correction. The pair hasn't limited negative risks, and that makes sense if someone considers that the 150 level is a key point for the Bank of Japan. We saw the central bank intervening in markets when the pair was trading around that level during the previous months. So that fundamentally there is also risk for a downside correction. And in this case, I would keep a close eye on the 148.75 former support zone. The 20 and 50-day moving averages could probably also limit downside movements, while if the price falls below the 147 mark, which is also the 23.6% Fibonacci of this up leg over here, then the sell-off could pick up steam, probably pressing the price towards these strong support line and closer to the 38 and 50% Fibonacci retracement levels at 145 and 144.20. So that's all for this week's important FX pairs. Thank you for watching, and see you next time. Bye bye.